Subsequently, Bear Stearns was sold to the federal government. I mean, J.P. Morgan. J.P. Morgan's acquisition of Bear Stearns was only made possible thanks to the $30 billion guarantee from the Federal Reserve. This bailout raised major questions about the role of the government in a free market economy. So basically, pay attention to the language that they use. Once again, um, federal government, same thing. Just seems like to me they've made levels within it. Anyway, details on the scandal over VW cheating pollution emissions tests. Volkswagen admitted in September 2015 that it had installed devices in millions of its diesel powered cars. Damage to the business days after the scandal broke. VW booked a $7.3 billion charge uh, to earnings in anticipation of fines, litigation costs, and other payouts. But early in October 2008, a short squeeze triggered by an attempted takeover by Porsche that temporarily drove the shares of Volkswagen AG on the DAX from $285 to over $1,000 in less than 2 days. That's what the Post read. Um, I looked at it. I don't really know exactly the dates it squeezed or stopped squeezing, other than what I've just accounted. You can Google search it, but it ran for 3 days. You know, um, the high basically was $978. Briefly, it said, making it the most valuable company in the world. The massive squeeze for short sellers who had placed bets that VW would fall, but the stock had higher and higher prices in a bid to basically cover their short positions. Consequently, Volkswagen became the world's most valuable company as its market capitalization rose to $370 billion in 2 days. The stock peaked on the second day of the squeeze. A short squeeze happens when many investors short a stock that means against it, but the stock price shoots up instead. If a stock price rises quickly, then short sellers sometimes scramble to close out their positions as rapidly as possible because of margin accounts, margin calls, or liquidity being forced to cover and buy back the stocks at a higher price. On Sunday, October 26, 2008, Porsche dropped a bombshell. It announced it had increased its stakes in Volkswagen to 42.6% and held cash settled options of a further 31.5%, meaning it had positions on up to 74.1% of Volkswagen shares. How about the Enron scandal? That was December 2nd, 2001. It drew attention to accounting and corporate fraud as its shareholders lost 74 billion dollars in 4 years, lending up to leading up to its bankruptcy, and its employees lost billions in personal pension benefits. Enron went from $90.75 to 26 cents. So, and then of course, the fees and fines. Volkswagen was punished, so to speak, for their deeds. Volkswagen had to pay 2.8 billion dollars in criminal fines for rigging diesel powered vehicles to cheat on government emissions tests. You know what I mean? They were Jimmy rigging the cars to cheat the test, to cheat the government for the money. Even caught red-handed, still just nothing happens. A slap on the wrist. So be wise, people. Be wise with your investments and make decisive executions for a profit or gain when making money. Take the money instead of waiting on the moon. End up holding the bag. You know what I mean? I almost forgot about Enron scandal. It was a series of events involving the dubious accounting practices of the resulted in bankruptcy of the energy commodities and services company, Enron Corporation, and it also diluted the accounting firm Arthur Andersen agreed cause the downfall of both of the corporations by developing a system where no one was actually looking out for the good of the company or the clients. The Hungerfield, the Hungerfield, um, the Hungerfield executives were, basically making decisions in their own personal interest at the sacrifice of the company, which led to Enron's collapse, and basically ran the shareholders, into the ground for $40 billion. I mean, ran them into the ground to where they had to file a $40 billion lawsuit after the company's stock price, plummeted. Basically, it achieved a high of $90.75 per share in the mid 2000s, and then plummeted to less than a dollar by the end of November 2001. So it took about a year. So I guess it's a reoccurring theme. Greed by the Hungerfield companies and executives using fraudulent accounting practices to inflate the company's revenue and their pockets, and high depth in its subsidiaries. The SEC, credit rating agency, and investment banks were also accused of negligence and, in some cases, outright deception that enabled fraud. So, did you get that one? Here, I'll read it again. Um, so, I said, I guess it's a reoccurring theme. Greed by the Hungerfield companies and executives using fraudulent accounting practices to inflate the company's revenue, and high depth in its subsidiaries. The SEC, credited rating agency, and investment banks were also accused of negligent and, in some cases, outright deception that enabled fraud. Okay? Okay. So, um, then you also have, of course, the icing on the cake. Fucking more trickery, more of the same fraudulent conspiracy, and illegal practices, you know what I mean? Stop game, you know what I mean? Let's just take away the option to buy, right? Of any asset. They stop the game at the GameStop. Robinhood takes away the buy button. See how greed causes negativity for everyone and everybody. Unfortunate news in regards to Robinhood. Fuckery. Wrongful death lawsuit filed. The family of a 20-year-old trader who died by suicide after seeing a negative account balance of $730,000 disclosed the settlement on Thursday in its IPO filing. Robinhood is fined $70 million over misleading customers and system outrage. It says that and system outages. And Robinhood also faces 49 class action lawsuits and 3 individual actions in federal and state courts relating to the early 2021 trading surge when they took away the button, and manipulated the stock. January 27th, 2022, a U.S. federal court on Thursday dismissed a lawsuit accusing Robinhood Markets Incorporated of violating state laws by restricting trades on so-called meme stocks during January 2021 rally. It moved that retail traders alleged results in billions in losses. So you see, the conspiracies continue, But supposedly, it's a new day. You know what I mean? Um, you know. supposedly. I mean, we're just waiting to see. Um, January 2021. Supposedly it's a new day. The DOJ, the SEC, and the FBI are rolling out rules and regulations as well as the RICO charges on the hedge funds, market makers, and the market. It might bring some order back to the market to enable democratized access to trading and exchange of capital and investors of all kind in the market to have, a safe place with integrity, honesty, and fair trading practices. You know what I mean? Conspiracy free trading ground with equal opportunity for all investors participating in the market, where all the stock in the market are slowly making gain reasonably based on supply and demand of the product or production or profitability of sales. Fundamentals. But of course, you can still catch a runner on a trend with some research, awareness, and timing, or a catalyst. Fact, conspiracy is always lurking around the corner. Somewhere, greed is always the catalyst for fraudulent activity and others' expense for personal gain of another. Play the game at your own risk, you know what I mean? And please use common sense.